Hi, thank you so much for coming today. People are still rolling in, but I guess we will start the webinar. So thank you so much for attending today's webinar, and we are excited to launch our first webinar series called 3 Tax Saving Secret Every Fractional CFO Needs to Know. And we give an opportunity to ask questions along the way. But if you have any question during the webinar, please put question in a chat box, and my team member, Jennifer Myers, will be monitoring that. So who is this webinar for? So if you're fractional CFOs, you're already vital factor to your clients, increasing top line revenue and bottom line profit. That means you're increasing taxes as well for your clients. So we wanted to share our experiences, how to bring your practice to the next level and better optimize taxes for your clients. We are here to show you 3 tax credit savings secret every fractional CFO needs to know. So what is our goal today? As you're increasing top line revenue and bottom line profit, we wanted to share how to better optimize taxes utilizing tax credits and incentives, and potentially saving thousands to millions of dollars in tax credits. So only way for you to ensure your clients are optimizing taxes, you need to have ongoing analysis as well as working with team of tax credits and incentive expert like us. So let me tell you who I am. And my name is Yuko Tsuchida. I'm a founder and managing director of Hito LLC. I started my career with a Big Four accounting firm called KPMG. And I started first CPA firm in 2008, focusing on tax credit, tax incentive. In 2016, I had a highly successful exit from that company. And over 15 years, I've been specializing in tax credit, tax incentives. So what is my story and how did I get here? So when I was little, I was obsessed with abacus, and I even competed in the abacus competition back in Japan. And naturally, I started loving math. And at age 14, I decided to become an accountant. And a little bit about my family, they had a small construction businesses back in Japan. And so my parents struggled through their journey as an entrepreneur. So I wanted to help the business owner as well whenever I grew up. And as I said, I started my career was preparing tax returns for KPMG, but I didn't feel like I was helping businesses during that time. And eventually I found tax credit, tax incentives, and I loved it because I felt like I was helping businesses and local community as well. And although I was working long hours, like 12 to 15 hours a day, trying to master all tax credit, tax incentives, I just didn't feel like I could do it myself because there are so many tax credit, tax incentive out there. And at that time, I just didn't have I didn't also have a structure where I understand fast changing client businesses so that I can proactively identify opportunities. So I felt like I was doing a poor job. One night, I was having dinner with my friend who is a fractional CFO. He was telling me his CPA firm for his clients was proactively looking for opportunity or not. And he was spending way too much time researching available credits and incentive for his clients, and also researching multiple providers who can help his clients. So for me being credit incentive person for a long time, I had a wide network of specialists I can tap into, including R&D tax credit, cost seg, 179D, and job tax credits or negotiate tax credit. So we start talking about what if we create a team of specialists around him and complement his practice. But we didn't know how it's going to work. But he brought us into one of his clients, And it turns into we were able to save thousands of dollars for his clients. And with frequent touchpoint, quarterly business review, we were able to identify additional opportunities, and we are continue saving thousands and thousands of dollars for that clients. So he was really happy because he didn't spend too much time looking for multiple providers, nor researching available tax credit, tax incentives. And client was happy because we are saving his taxes. And we are happy because we are doing what we love to do. So how does this apply to you? So if you're a fractional CFO that has manufacturing or SaaS or high-tech clients, or just like high growth clients, and if you only work with the tax preparer, or if you only have like R&D tax specialists on your team, this webinar might be for you. So what over 15 years, our team has saved over 100 million in tax savings. So what we will cover today, number one, mistakes like we often see in credit and incentive arena. Number two, how to better optimize taxes while you're reducing risk in taxes. And lastly, we will cover how to take your practice to the next level. So secret number one is the mistakes like we often see in the incentive and credit arena. We will talk about that. So you may be thinking you're already working with CPA firm and potentially R&D tax experts, and why do you need us? But if you're on this webinar, you may be thinking, we identify all tax credits incentive out there for your clients. That concern might be valid. And let me show you why. So as you probably know, US code is 3.7 million words with 9,800 sections. And in addition to that, each state has their own set of rules, and rules and regulations are always updated. And here's an example, like employee retention tax credits. Probably many of you are aware this came from CARES Act under COVID. It was enacted in March 2020. Since then, there was 5 different changes, and there's one proposal out there to eliminate tax credit end of Q3 this year. So as you can see, a lot of updates are always changing. And it is a lot to keep up with, tax credit, tax incentives. So a lot of time, I get asked, why do you need somebody like us? So I love to use analogy of medical doctors. So when you're sick, you of course go to your family doctor, but if you have pain in chest, they may refer you to cardiologist. And if you may, if you have freckles, they may refer you to dermatologists and so forth and so forth. So like medicines, taxes are so complex. And I always say it's important to have a team of experts so that your clients can maximize opportunities. And this shows how complex US tax systems are. So let me give you the first example. One of our clients are a plastic jar manufacturing company located in La Mirada, California, which is outskirts of LA. They have 2 manufacturing locations nearby. In 2020, they had $20 million annual revenue with 75 employees. And they have been claiming R&D tax credit for some time. So the issue they were having was they're growing rapidly, and they needed more manufacturing and warehouse spaces. And they also need to hire quality employees, but at the same time, they're worrying about tax payments, increasing tax payment. And challenge they're facing, they're working with a team of advisors already, but the tax strategy hasn't changed for many years. And the team was more focused on looking back versus like looking forward, where the company is going. And therefore, like, the company was not sure whether or not they're maximizing tax credit and incentives. So when we got engaged, we look at holistically. So we went into company and set up the meeting and really understanding where the company were and where are they and where are they going. Based on those understanding, we start identifying tax credits that fits today's business model for the company. So first one we looked at was R&D tax credit. They were already working with the R&D tax provider. The process hasn't changed for many years, so the owner asked us to review to make sure they're maximizing tax credit. So we interview all personnel and understanding their role in the company today. Therefore, we were able to identify additional employee who would qualify for R&D credits, which resulted in $25,000 additional tax credit for that year. The second opportunity, because of the understanding business model and where they are going, we saw the opportunity for future credits. And they were considering expanding into Arizona, Tennessee, in addition to California. And the total investment or total projected investment was $8.5 million in next 5 years, which is 2021 through 2025. And which included $6.4 million capital expenditure and 25 additional employees, which equal to $2.1 million in wages. And the potential credit we identified for California was $550,000, and Arizona was $1.2 million, and Tennessee was $1.3 million. And we went to negotiate those credits on behalf of our clients. End of the day, after considering various factors, the company decided to stay in California and expand within the California next 5 years. And they took that $550,000 tax credits. In addition to this, we were able to identify the company is providing a lot of training for their employees in manufacturing companies. So currently we are working with California Employment Training Panel to develop their training plans, and so that we can go apply for training grants. So as a result, we were able to identify additional $25,000 in R&D tax credits, and they obtained more than $500,000 in California Competes tax credits. And currently, we are working on California Employment Training Panel to get funded for training needs. So in summary, tax credits and incentives are not one person's job, and one person cannot be expert in all things. So it's really important for a company to have a team of experts who are helping you. So secret number 2, how to better optimize taxes and not overlooking credits while you are reducing risks. So many CPA firms focus on one area of practice. It is key to find the right expert with right experience and build a team around you and your clients. So let me give you a little interesting fact. So tax practitioners spend billions of hours complying federal income tax laws because it's so complex. And if your clients get audited, almost 90% of tax audit results in some kind of changes. So it shows you how complex they are, and there is always litigation going on with the IRS. So second case study I wanted to show is local brewing company located in Los Angeles, California. Their annual revenue is about $5 million, and they have a loyal customer base, and they are always innovating and creating new beers. And they have been claiming R&D tax credits for some time as well. So the issue they were having was because of rapid growth, team was over capacity, but the fractional CFO wanted to make sure their clients are optimizing credits and incentives. And they're already working with CPA firm and R&D expert, but they were focusing on past activities and not identify credits going forward. So they were worried about they were missing on tax credit, tax incentives. So we got engaged, and same thing, we always look at whenever we get engaged, we have holistic approach. Where has the company been, where the company is, and where they want to go, so that we can understand their business and business model, so that we can create tax strategy fit their business model. So R&D tax credit, they were already working with the previous providers, but they were concerned where that number came from. So we put the plan and making sure our clients understand how that credit is computed and how that process is. So which included kickoff meeting where we review the law and regulation with the clients and stakeholders. And second was interview, which consisted of plant tour, employee interviews. And then last, whenever we finish our project, we always have a meeting to go over the study so that client has confidence in what we are putting together. And also during these conversation and really understanding their business model and business operation, we were able to identify they will qualify for employee retention tax credits. And at this point, they received some advice saying they may not qualify because the provider was only looking at the surface level and revenue, focusing on revenue. So we sat down with the businesses, the business owner and fractional CFO, and really understanding why they qualify and what their operation was during the COVID era. And end of the day, they were able to qualify for ERC. So which resulted in $78,000 in R&D tax credit, and they were able to obtain $47,000 in employee retention tax credit, and they're going back and recomputing 2020 tax credits. And in addition, we are in process of applying for California competes tax credits, and they are in implementation of work opportunity tax credits. So as a team approach, we were able to come up with different type of tax credit. So it is really just reinforcing that it's really important for company to have team of expert, including company, stakeholder, and CPA firm who is looking for not just past, but future looking tax credits. So secret number 3, fastest way for you to take practice to next level. So due to continuous updates in regulation, not one person can master all area of taxes. So it's really important for us to have CPAs who are expert in compliance and tax credit, tax incentive person who are specialists in that area. And also fractional CFO, you guys are expert in finance. So these are some facts. There are many tax credits available federal and state level, and some are industry specific. And every single year, there may be new legislation, new credits coming up. And I found a really interesting study back in 2017. So this is for the federal level. So 2017 study showed $32 billion of federal tax credit were taken from various industries. So these are top 4. So for example, in manufacturing industry, they are obtaining $7.3 billion in tax credits every year. And high tech or information they are taking about $3.2 billion in tax credit. Construction is 278,000. So it's really 278 million. So it is a big industry. So let me give you some interesting study as well. So this is a SaaS company developing SOX audit management system, serving mid-sized to Fortune 500 company. And we were introducing early stage, and as of today, they're not yet taxable. So the issue they're having is like, they're changing every day through like rapid growth. They are not taxable, but they were not sure, like, although they were paying a lot of taxes through payroll taxes or sales and use, they weren't sure, like, they're optimizing taxes, or they even have opportunity to reduce those taxes. The challenge they're having was they had a local CPA firm who is excellent, but they specialize in small businesses, and they're not expert in high tech nor tax credit, tax incentive arena. So when we got introduced, we set up like, quarterly review to understanding their business model and where they have been, where they are, and where they want to go. And in those, like, quarterly review, we talk about taxabilities, income tax, sales and use, and payroll tax, and what type of, like, opportunities are out there, because tax credit is not just income tax. It could be like, payroll or cash opportunity or towards sales and use. So we look at those areas. So these conversations resulted in R&D tax credit. Portion of it they were able to take against payroll taxes, which provided cash opportunity for the client for $100,000. And remaining, they are carrying forward towards income taxes whenever they get taxable. So summary, one person cannot master all area of taxes. So it's really important for everybody to have team approach. Number two, just to have like, proactive, like, business review, not just looking back tax credits, but always looking forward and changing like your tax credit, tax incentive strategy to fit current business model. So far, I just want to ask, like, does anybody have a question? Okay, so I will move forward. So we just covered three things. Number one was not one person can be master in all tax area. Number two was work as a team to optimize tax credits while reducing risk. Number three, and how to take your practice to the next level. So I wanted to talk about our tax saving and incentive assessment process. So the goal is to help identify tax optimization plan so that it's easy for you to present to your clients while you are focusing on day-to-day work, so that we can set yourself apart from other CFOs. And in your package, this is what you're gonna get. Customized tax credit, tax incentive opportunity outlining specifically for your clients. So you may be wondering, like, how much does it cost? So if we do this on hourly basis, and we do this for some companies, and discovery call is about $700, and ask to review last 3 years of tax return is $2,500. And for us to do full scope analysis of what's available for federal and state credit incentive, that takes us about $7,000. And the total is about $10,000. And obviously, we are not going to charge you $10,000. But if it eliminates you doing all the research and searching for different vendors to provide these services, and also eliminate you spending time to create team expert, Does that worth it to you? So as I said, we do this for like some of like, clients directly, and we charge them about $5,000 to do this work when they're interested. But we wanted to pilot this program with like, other fractional CFO firm like you, and tax deadline is approaching rapidly right now. So if you book a call before the end of the month, we wanted to offer complimentary service to you and your clients. So if you're interested, please schedule a call or visit our website to learn more. And I will just open up for questions. And Jennifer.
Thank you, Yuko. This is Wendy. Good to see you.
Hi, Wendy. How are you?
I'm good. I'm good. Thank you for asking. So if someone, such as ourselves, are working with customers, right, that we think they might have a potential for tax incentive, how would you suggest that we approach that with the customer, and how would we get you involved?
So we typically like to have initial call to understand their businesses and like, their taxability. And so that we don't waste their time, like, asking them like information we don't need. So the best way is like, if you can like set up the call with you or including your client, that would be probably the best way. And typically, like, fractional CFO, like you guys, like, I can just talk to you and you have like financial information. So we can identify as a team, like, what might be available for your clients.
Awesome. Thank you for that.
Does that make sense?
Oh, yeah, definitely. Thank you.
Thank you, Wendy.
You're welcome.
Anybody else?
I think Lynn has a question in the chat.
Let me see. Rob asked, are the fee percentage of credit or fixed fee basis? So Rob, we work on two different ways. We do fixed fee basis for like negotiate tax credit oftentimes for application phase, because there's so much unknown factors out there. But typically we work on a percentage basis anywhere from 15% to 25. And it will be depending on the complexity of the tax credits and size of credits that might be available for the clients.
Yuko, this is Jennifer. So this came directly to me. Can you kind of do a quick overview again of exactly what kind of services you offer?
Sure. So we offer, we look at like, different type of credits in federal and state level. And the big, the well-known one is like, R&D tax credits right now, employee retention tax credits. And for federal level, we do like, impairment zone tax credit or federal Indian tax credits. And state side, we look at job-based tax credits and enterprise zone credits, and investments and training-based credits. And we may not specialize in all the area, but we will bring in expert to complement our services as well.
Great. And then one other one that came to me was, how do you typically work with the fractional CFOs? You give a highlight of how you work with them, the different types of ways you work together.
Sure. So we do like two different ways. And like, first one, like, we often work with like fractional CFO firm, and they're the point person, and they, our clients, we view fractional CFO firm as our clients, and we, any communication go through them. And other way is they want us to just directly work with clients. So we may be working directly with them. And there's two ways for us to work with these firms. One is referral partner, where we share some revenue. And then also we may be, discount fee for their clients.
Great. And then Wendy Roberts has a question. What are some of the payroll tax credits that stable and mature companies might look for?
So right now, the employee retention tax credit is the one for the federal level. And payroll state level, like, we can look at different states. California, there's not much out there right now, but during the COVID, there are some program at the state level as well.
Did that answer your question, Wendy?
Yes, it did. And I need to give Len credit for that question.
Cool. Well, thank you so much for everybody joining us today. This is second webinar we had, and we really appreciate you being here. And if you have any question, please contact me directly, or you can go through our website and book a call with us, and just use us as a resource. And we are happy to answer any questions or help your clients. Thank you.
Thank you, Yuko.
Thank
Good
you.
to see you. Awesome job.
Thank you.
You're welcome.